Hey guys, Gerald here. I received this comment the other day that buyers should wait until the market crashes. The real estate market may or may not crash. Most likely, we're going through a market correction right now, mostly caused by the increase in mortgage rates and COVID-related inflation. The previous 2 to 3 years were not sustainable, with soaring prices and insane competition between buyers for a limited number of homes. Home prices were increasing as much as 20% year over year in the past 2 to 3 years, which was not sustainable. Meaning that if you were lucky enough to have bought a house in 2018 for like $200,000, your house is probably worth about $320,000 now. It could have been worth as much as $345,000 earlier this year when we were at the top of the market. With the correction we're experiencing now, the values of houses on average have dropped by 5 to 6%. So at the top, your house was worth $345,000 and you lost about $20,000 to $25,000 with the correction to be about $320,000 right now, as of today. Which is still awesome for buying it for $200,000 4 years ago. In the entire history of the United States, we experienced 2 housing market crashes. That was during the Great Depression of the 1930s and the Great Recession of 2008. All the other times we experienced a drop in real estate prices, those were considered market corrections. And they come in cycles. The market correction typically sees values dropping as much as 5 to 10% from the top of one cycle to the bottom of the next cycle. But over time, real estate historically has always gained value over the ups and downs and many corrections we have had, including the 2 crashes. Even if we do experience a market crash similar to what we had in 2008, in my area of North Carolina, which is Raleigh-Durham, houses on average lost only about 20% in value. We were far better off than other parts of the country because the economy in the triangle is diverse and strong. Eventually, the housing market did recover nationwide from the 2008 crash. The folks who bought at the top of the market in 2006 or 2007 were probably underwater from 2008 to 2011. If you were able to weather a recession, keep your house up, and pay your mortgage, by 2013, you should have no longer been underwater. And by 2018 to 2020, if you haven't sold by then, your house should have been worth as much as 3 to 6 times what you had bought it for in 2006 or 2007. I don't think home prices will drop much more in the coming years because we still have the same underlying issues. We still do not have enough housing for everyone. Though we are in a market slowdown for those looking to buy and sell, the rental market has exploded. The demand for rental housing has caused rent prices to increase as much as 30%, and it's expected to continue to increase. In my opinion, once buyers figure out that rent prices are considerably more than a mortgage for the same type of house, even with the higher interest rates, and if inflation has been handled somewhat, they will jump back in the market looking to buy. Once that happens, the real estate market can get crazy again, like the previous 2 years, when the demand for housing outpaces the supply available. Thanks for checking out this video. Comment below if you have any questions, and I will talk to you guys later.